Hey there, Heather Sakers here with Coldwell Banker Seaside Realty on the Outer Banks. And Memorial Day is coming up this weekend, so we are officially about to kick off the rental season here on the Outer Banks. And I wanted to bring up, I thought it was a great time to address the difference between advertised gross income and owner gross income, because this question comes up with almost all of my investor buyers as they're looking at rental projections and rental pro forma and history. The question is, what is the difference between advertised gross income and owner gross income? And those are two very different numbers and important to understand, especially if you're trying to figure out what property will have the best cash flow for your investment. So I reached out to Michelle Copeland at Seaside Vacations to get her kind of quick and dirty take on the difference between the two. And she gave me the most perfect, concise explanation. And I'm just going to share with you real quick what she shared with me. And of course, every company does this a little bit differently. So this is specific to Seaside Vacations, but they all have some kind of version of this. Okay, so when looking at a Seaside Vacations rental projection, the owner-based or owner gross income is what the owner commission is going to be paid out of, not the advertised gross income. So they take the owner-based rate and add to that a bundle of fees, which covers really guest-related fees. So it's only, these are fees charged to the renter, not fees that go to the owner in any way. And those can include anything from linens, keyless entry, maintenance program, reservation fee, credit card fee, welcome gift, and a security deposit waiver. So again, every rental company is going to have some kind of version of this, but that is how you're getting that advertised gross income amount. So it's all those fees that are kind of bundled together that are charged directly to the renters and never hit the owner's pocket. So just be sure that when you're looking at cash flow and using gross income to establish or figure out cash flow for a particular property, that you're looking at and just using the owner gross income, not the advertised income. One other thing I thought was a great point that she shared is that the advertised rate can also vary depending on where you see the home advertised. So especially now that we have homes advertised through VRBO, Airbnb, she mentioned Homes to Go, Google Travel, Whimstay, Marriott, Bonvoy, etc. So, and that's basically due to the fees that those service providers charge. So the fees will also vary, and that's where talking with these property managers in a little bit more detail to see what programs they're utilizing and what fees they're looking at on their back end, that will affect what they're going to be charging to the renters as well. So hopefully that helped explain the difference between advertised gross income and owner gross income. And of course, if you're thinking about jumping into the market on the Outer Banks or looking for an investment property, my team and I would love to help. Heather Sakers' team at Coldwell Banker Seaside Realty, and reach out to us anytime. Have a great day.